Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hi, a very good morning. You're watching Trading Hour on CNBC TV18. I'm Ekta Batra. With me is Prashant Nair, and it's turning out to be a day where we've lost a little bit of enthusiasm, but who's complaining? Because it's another record high that we're sitting on for the Nifty and the Sensex, but they're currently off their highs. So just about consolidating at this point in time with a mild underperformance, which is really coming in for the mid caps. But a lot of stocks in focus, and I think a lot of the financials of Bank Nifty constituents really unfocused today. Bank of Baroda as well as ICICI Bank reacting to their numbers respectively. Just look at Bank of Baroda go up around almost 10%. And we have something like Axis Bank, which is coming out with its numbers today. HDFC coming out with numbers, not a part of the Bank Nifty, but nonetheless important set there. Gati, which is off the day's high, but still holding on the back of an acquisition buzz. And TCNS Clothing, which is a new listing, a little bit of a subdued listing off the day's low, but nonetheless still down around 2.5 to 3% odd. Hi, Prashant.
Ekta, hi. You got the stocks covered, you got the earnings covered. So I'm just going to focus on the global setup, really. So, I mean, by the way, this week we've got some important central bank decisions which are coming up, including the RBI, which will sort of announce what it intends to do on Wednesday. But before that, you got the Bank of Japan. So it's a two-day meeting, started today. Tomorrow we get the decision. And actually, out of all of these four, of course, RBI being the central bank decision here is going to be important. But out of the four, I mean, the big one, which is being watched very closely, is the Bank of Japan decision. I mean, I don't remember the last time when anybody really made a big fuss about BOJ and what they'll do, but there's been a fair bit of commentary that the Bank of Japan, although they might not touch policy rates, they might do something with regards to the yield target, the neutral rate and things like that. So watch that. That's tomorrow. The US Fed expected to do nothing. RBI, I mean, we've been talking about that. And Bank of England on Thursday, again, expected to be a non-event. What's the global setup looking like? Let's just quickly put a couple of points up. First up, the S&P 500, which I've been sort of highlighting now for the last many weeks, actually, it continues to be in a pretty good place. I mean, it's trading above the March high. And this is despite a barrage of headline risk, political risk, all kinds of things. It's above that pivotal level of 28.02, and it's on track for a new high and the previous high. Two major proxies for global growth are looking set to move higher. They've not yet, but they look in a, again, pretty good shape. One is the Shanghai Composite. It's stopped falling. It's beginning to show signs of stabilization. And the other is the KBW Banks Index, which is essentially made up of the largest banks in the US, which again is on the verge of breaking higher from its multi-month consolidation. So that's the Shanghai and the financials in the US always sort of have led any global big risk on, and they look like they're in a place where they could maybe rally from here. The other indication has been that through the course of last week, even as the yuan was depreciating against the dollar was rising basically. You know, what was different about last week is that Asian equity markets stopped falling, be it the Chinese markets, be it the Hong Kong market or others. The dollar is still appreciating, not by leaps and bounds, but it is still strong. But Asian equities have stopped falling. So that is different as compared to what we saw the previous couple of weeks before the last one. And oil, it's again in a stable kind of a place. You know, it fell 8% the prior 2 weeks. Last week was flat. We'll see where it goes this one. But, you know, you take all these things together and it doesn't look like there is any, in a way, problem. Let me put it that way. Will we really go sort of, you know, turbocharge this week? So timing is always difficult, but it seems like global indicators, all these indices are in a pretty constructive kind of a place. Ekta.
Okay, so that's the global setup, and let's get talking about the technicals back home then. We have Sudarshan Sakhani joining in to discuss that. Sudarshan, hi, morning. Over to you then. What would you be recommending both on the Nifty as well as in terms of, say, the mid caps?
Sure. Good morning again. See, the Nifty after a 6-day rally is in a consolidation of some kind. That is only to be expected. Markets cannot go up without a pause. But the trend is up, firmly up. So what we are now likely to see is a few days of consolidation. Inside a consolidation, you know, prices move up and down rather randomly. They go down and find support, then they find resistance. After doing this for a few days, I assume the Nifty will break out again on the upside. So the trade here is to hold Nifty if you have them, and you should be having them. And for short-term trades, buy the Nifty on any 40 to 50 point dip. But this is a buyer's market. We do nothing else except to look for dips and buy them. Stocks also then reflect the same theory and same ideas. I have NMM. M&M is a buying opportunity. The stock is on the verge of a breakout. Whether that comes today or tomorrow is difficult to say, but it should. The second buying idea is Indiabulls Housing Finance. This is a stock that had seen a decent and sharp correction. That correction is now behind it. So it's probably looking at higher levels now. It's consolidating and breaking out the upside. And the third is surprisingly BHEL. In fact, the PSU large infrastructure companies, BHEL, BEML, BEL, all the Bs, all the three stocks are giving signs of bottoming out finally and surprisingly. So for a short-term trade on the upside, a speculative but short-term trade, BHEL is a buying opportunity.
Sudarshan, we'll speak again. Thanks very much for that call on the market and those three ideas, trading ideas and stocks. Well, let's get Rahul Shah from Motilal Oswal in as well on the F&O trades. Rahul, what have you got? Morning.
Yeah, hi, morning. I think we've seen obviously the Nifty participating, and we have seen the participation in large cap as well as the mid caps gaining momentum in last few sessions. So my sense is from a lot of sectors have showing good sense. So I think OMC is one sector which I've been liking now, from smartly bounced back from the lower levels. So from there, top idea is HPCL. So I would buy HPCL with a stop loss of 285 and target of 315. Second is from the IT space. We've seen IT cooling off a little bit on last couple of days. So large cap IT continue to do well. That's what my sense is. And TCS looks interesting. So it's got a support at 1930 levels or so. So I would buy TCS with a stop loss of 1915 and target of 2035. And thirdly, from the metal space, I think again we've seen metals also bouncing back smartly in last three sessions. So JSW Steel again looks good on that front. We've seen the longs added in the future segment as well on Friday. So I would go long JSW Steel with a stop loss of 318 and target of 340.
It's a pretty flat kind of a day. Off the highs, as we were pointing out earlier, 9 points, 8 points lower, 11,270 is where the Nifty is at. The broader market is doing a lot better. Advanced decline is positive. There's about 1,270 stocks higher compared to 750, which are lower. Remember, we've had one good week for large caps last week, and we've had 1.5 odd good weeks. Great weeks, actually, for mid caps and small caps. Indices, both the mid cap and small caps, are up about 5% each from the recent lows. Okay, let's talk about commodities now. And the one commodity which, I mean, stock markets generally follow extremely closely is steel prices. Steel stocks, of course, had a great going till probably till the end of last year, and then there was a bit of confusion whether more capacity is coming on stream, which was not anticipated earlier, and steel stocks started to wither. They went sideways for a while and also lost a fair bit. Steel prices, though, that's essentially the lead indicator, are still doing pretty good, especially Chinese steel prices. Manisha is here with a roundup of exactly that. Manisha, morning.
Morning, and thank you so much for that, Prashant. Well, absolutely. You know, as far as the steel prices go, whether it's the Indian companies or Chinese for that matter, all of them believe that the steel prices will continue to gain higher from here, and they will, of course, pass on that to their consumers. But the Chinese steel prices, of course, have been running for yet another reason, and that really is that there are some curbs on production being announced from yet another couple of cities and provinces. We have seen the prices touch a new 5.5-year highs today. We did see the steel prices gain up by more than 4% in the previous week, and we are trading between 0.5% to 1% on the higher side on various of those future contracts there. Apart from that, so that clearly is the point. So tight supplies and cut in production going forward are a couple of things that are keeping those prices on the higher side. Joining us to talk more about that is Mark Do of Wing Fung Financials. Mark, hi. Thank you so much for joining us. What is your sense on the steel prices from here on? The production cuts, of course, the 6-week summer production cuts, we perhaps will see more of that coming in for winters as well. How are you approaching this sector as of now?
I tend to think that the production should be rather stable if you look at it from the longer-term horizon. But of course, the short-term cyclical fluctuations could really exist. So at this moment, I tend to think that the short-term volatility may increase a little bit, but overall speaking, I tend to think that it is rather stable.
How are you looking at the other metal prices? Because we've continued to see the nickel prices gaining firm. It is the copper prices which actually gained 2.5% in the previous week, but we have started this week yet again on a negative note. Same is the case for zinc, lead, etc. Most of the base metal prices have not been able to hold to the kind of gains that we saw in the previous week.
Oh yes, I tend to think that the whether the supply-demand conditions for these base metals as well as the other precious metals, they all are jointly determined by two forces. One is the monetary policy, which is more sensitive for gold. But for the other metals, I think it is more demand-driven in terms of real economic usages of these metals. But to refer to the economic growth data that have just been released for the States, I think that the global economic recovery should be rather good, in a very good trend. So I tend to think that the overall situation should be rather positive and optimistic for these metals. But of course, we can see that all these asset prices have been in different kinds of trajectory before because of the QEs. It distorted the prices to a certain extent. So at this moment, some kind of changes may not have the same predicted results as before.
Sure. You know, Mark, I was reading numerous reports over the weekend from the global experts, and a couple of metals which, emerge as favorites really are copper for some and steel for others. Would you choose between the two of you as a more bullish contender, or are you eyeing other metals really?
If I have to choose, I think copper is good choice.
Bullish contender, or are you eyeing other metals really?
If I have to choose, I think copper is good choice because we can see that the real economic growth is with us, and I think that sooner or later we can see that in the market. But of course, if you look at short-term speculative activities or the opportunities for trading, I still think that for the very, very short term, maybe one day or two, the gold prices may have a little bit more upside and some kind of rebound, because we can see that after the release of the economic data from the States, the US dollar may not have that kind of strength for upward movement. So at this moment, I tend to believe that precious metals may be a little bit better.
All right, Mark, we'll let you go at that. So precious metals emerging as the next favorite. Copper and steel, of course, have been in the run as most bullish metals for the last week or more.
Okay, well, it continues to be a market which is also about specific stocks. So I just want to pull up idea. Its Q1 FY numbers are, Q1 FY19 numbers are today. So it's actually holding up ahead of its numbers, up around 3.5 to 4% odd. Nothing much which is really expected in terms of numbers. Our poll is indicating a loss which is probably coming in at over 1,500 odd crores this quarter, and that would actually be the 7th consecutive quarter of losses for IDI if that is the case, and it would have expanded on a sequential basis as well. They did around 962 crores in terms of a loss last quarter. Some details coming in where we'll try and get you more information on that. The government has released its draft e-commerce policy, so we'll try and get you more details with regards to that as well. But in the meantime, Bank of Baroda is in fact trading near the day's high on the back of its Q1 numbers. Loan growth has come in at 20%. Lata Venkatesh spoke to Mr. Jaykumar, the MD and CEO of the bank, and here's what he had to say.
Should there be mergers, my understanding is that the capital issue of the company that is merged with us would be addressed, and it therefore would not result in a drag into a balance sheet. That said, mergers are also about cultural issues. It's also about integration of systems. We also got to make sure the momentum in our business or the other bank's business is not impacted, and so we have to do a number of things to manage them. But at this point of time, I would rather skip this point because I don't think I don't have anything to suggest or not suggest a merger is on the cards. But I do think that the objective of any such merger would not be to diminish Bank of Baroda, and whatever arrangement comes in will be after dealing with the adequate level of capitalization. But I think I don't see anything in the immediate horizon that I need to talk about or explain. Now, as far as we are concerned, we are also preparing ourselves for merger, not in the sense we anticipate it, but it's a good thing to do so. And this includes building scalable back-end operation structures, being able to build a lot of things on a plug-and-play systems. So if you do have any kind of merger, then we can handle the transition well. But there's nothing on cards.
Are you there after October? Has the government approached you? Have you said yes?
So I would put it to you in 2 or 3 ways. One is that whatever changes we have made, we think are in some sense permanent and will therefore continue regardless of whether I'm here or not there. So that's the first point. Second, one should not be naive enough to believe one's continuation is necessary for the continued growth of the firm. At least I wouldn't think that way. Third, as far as I'm concerned, I'm deeply committed to Bank of Baroda for a variety of reasons, and I therefore stay in that position. I would do what is rational and necessary for Bank of Baroda to reach a point where we believe that the transformation is completed. Finally, the government has its own process. They have set a transparent process. They have BBB and others looking on. So I would say let's wait for a month or so for the final decision to come. But I would think whatever comes out of the result would be something that would strengthen Bank of Baroda.
Okay.
That's really what I would leave it at. Okay. And as far as my position itself is concerned, among all things that I do, the thing that I would aspire for most is to make sure that the task I came in for and the effort that all of us, the 54,000 of us have put together, all of that come to a level of fruition. And therefore, if there is a degree of flexibility that needs to be shown from my side, that obviously is there.
Why do you say within a month we should know? Because your date is still October.
Yeah, within a month, maybe 45 days, but sometime in the near term, it should
The government has broached the topic with you?
There is always an ongoing discussion with the government with respect to the way the bank should be managed in almost all items, in not only my succession plan, but also other succession plans in the various levels are also discussed. And it's a fairly good quality discussion we have. The board chairman also has this discussion separately, so those are all part of the course.
Okay, so that is Bank of Baroda's Jaykumar talking to my colleague Lata. Staying with financials, we will get more numbers today. So HDFC will report. We'll also have Axis Bank, which will release numbers. Abhishek Kothari, my colleague, is here in our studios to take us through the expectations on these. Abhishek, morning.
Good morning, Prashant. So the key expectation will be that you look at the IND-AS impact, that is the new accounting rule impact on HDFC Limited. There are few points to be watched out for. Number one being how they treat the zero coupon bonds. That will be seen very closely. The ESOPs, the big impact is what is the fair value, and that difference has to be debited by the P&L. The mark to market, now they have no impact on the group companies, but HDFC Limited has investment in listed entities. So mark to market, how that provision arises or the taxable arises needs to be seen. The commission paid to brokers both on liability side and the asset side of the balance sheet was earlier amortized over the period of the asset, but now they have to pay it at one go, so that will be seen very closely. Net interest margin above 3.75% will be positive. Last quarter it was at 4%, and the AUM growth, that is the asset under management growth of 18% plus, will be positive. Last quarter it was at 18%. Asset quality has not been a worrying factor for HDFC Limited, so gross NPA below 1.2% will be positive. Our polls suggest an NI growth of 16.5%, while net profit to grow at 35.5%, given the fact that there was a low base last year. And coming on to Axis Bank, the last quarter, the slippages or the fresh accretion of bad loans were at 16,500 crores. Analysts on street are working with a number between 5,000 to 5,500 crores. Anything below that will be seen positive, above that will be negative. Asset quality movement will be seen closely. Now, gross NPA in the previous quarter was at 6.8%. So how that behaves will be seen closely. The lower rated book, which was at 12,250 odd crores, how that moves, whether slippages come in from that or that remains stable and on the higher side, will be seen very closely. Net interest margin over the last 6 quarters has been on a declining trend. So last quarter it was at 3.3%. Few quarters back it was at 3.9%. So whether that gets arrested or not will be seen very closely. Loan growth above 15% will be positive. Last quarter, it was at 18%. Our poll suggests an NII growth of close to 6% on a YY basis, while net profit to come down by as high as 59%. But remember that last quarter, they had a loss of 2,200 crores. Against that, we are expecting a profit of 534 crores. Back to you.
Okay, all right, Abhishek. Thanks very much for that. So it's definitely going to be a very busy day in terms of Axis Bank as well as HDFC. But important news which is coming in both for Lupin as well as Aurobindo. Let's tackle Aurobindo first because important news coming in there. They've received their first approval from the Unit 4 facility. Remember, it's the injectables facility. They've received an approval for Angiomax generic injection. That's the generic name of the injection, but Angiomax is really the innovator name, and it is used for angina and heart issues, etc. Now, why is this important is because Unit 4 had received 9 observations all the way back in Feb of 2018. After that, the company said that they had remediated it, plus they had received a voluntary action indicated status indicating that, you know, things are okay at the plant, but everybody was waiting for an approval to come through to know that things are okay from that facility, and this is the first approval which has come through from that plant.